Hello and welcome to Gotstockz. Today is Friday, April 4th, 2025, and the market is having a major meltdown. So we're going to take a look at some of the technical analysis to see if we can determine where this thing wants to go to. Of course, nobody knows, but there's going to be some stopping areas of some support and resistance areas that we need to look at. I appreciate and respect your time. Let's get right into the charts. This is a 20-year monthly chart. Each candle represents 1 month. And then this is our 2008 banking and real estate corruption in the industry. A lot of corruption going on that our tax dollars had to pay for this meltdown in the stock market. But we want to take a look at those numbers to see exactly what the percentage ratio was on that. So we have 14,198 and 6,469. This is the Dow Jones Industrial Average. I'm going to go to our percentage calculator. 14,198, 6,469. That was a 54.43 decrease. That was a major meltdown in the stock market in 2008. A lot of banking corruption going on with the CEOs and all the upper management of a lot of real estate companies and a lot of banking financial institutions giving out loans to people that did not even qualify. That's a major meltdown there. Let's come over to here. A 1.5 year major meltdown that started in October of 2007 and finally hit a bottom in March of 2009. The next meltdown we want to look at is we have this meltdown here. When was this? This is 2018. It started in October, ended in December. So it's a pretty quick meltdown. Let's take a look here. 26, 951, 21, 712. Boom. This meltdown was 19.43%, so that was a decrease in that meltdown. Well, this is our COVID crash right in here. We reached a high in, looks like February of 2020, and then it bottomed out in March of 2020. So, but essentially this was a 3-month from January to March, and the recovery started happening at the end of March. But we had a 3-month meltdown here. Now this COVID meltdown, if you recall, this was the end of the world. If you listen to all the news and all the noise and all the jokers on TV and all the politicians, when the circus comes to town, the world was coming to an end. Everybody took their money out. I don't know what they were going to do with it. The world was ending. But anyway, let's take a look. We have 29,569 and we have 18,213. Right? This meltdown was 38.4%. That's our 29,568 and our 18,213. Keep the change. So that little meltdown was almost 40%. So that was a pretty scary meltdown because after all, the world was coming to an end. This really wasn't a meltdown. This was a bear market of 2022. We look at this started in January of 2022. We reached a high of 36,952, right? 36,952. And then this went on, and then it looks like it hit a low in October of 2022. It's essentially a 10-month bear market, hit a low of 28,660. So calculator here. 36. 660. That major meltdown was 22.43%. This is the Dow Jones Industrial Average. Of course, it's different in the NASDAQ, and it's going to be different in the S&P and the Russell, but this is the Dow Jones Industrial Average. Let's take a look at what's going on with the current numbers. We have the high is 45,073, 45,073. This was reached in December of 2024. And then now today's low, as of this current time, of 1:30 p.m. on Friday, April 4th, we have a low of 38,598. 38,598. Keep the change, 38,598. Let's take a look and see what that is. We're going to come to here and we're going to go 45,073. And then we're going to come down to here and we're going to go 38,598. Right now we're at a 14.3% decrease. So in the grand scheme of things, we're currently in the Dow Jones Industrial Average. This meltdown that started essentially in December, it looks like we're at 14.36%, almost 14.5% drawdown. It's not the end of the world. The market will recover. Don't listen to the news. You haven't sold at the time. Now's not the time to sell. Don't sell. If anything, start buying more. Dollar cost average, weekly, bi-weekly, monthly. Because, you know, a year from now, this is all going to be over and we're going to save the world again. And that's what we do. We're Americans and we're going to save the world and we're going to save the stock market. We are the financial institution of the world. The entire world is looking at us and looking at our markets. Now that they've been put on notice with the tariffs, maybe it could have been done in a better way. But, you know, coming at it this hardcore, well, here's your stock market result because the market has no idea how to react to all those percentages that we're going to implement. Should cause inflation, I would think. Where is it going? We have support that was established in 2022 of 36,952. And this is where we're currently at, 38,793. Can it go all the way down to here? Can it push even further? It certainly can and probably will. The feds are probably going to come in and cut some interest rates and say something that is going to help the market. And then Trump, he's going to need to come in and say something magical and what's going to turn this thing around. But this will bottom out and it will recover. Could this be a long-term recession? Could this be a bear market that lasts for a year or two? It absolutely certainly can. When the dust settles and the negotiations happen with the countries and we start getting in alignment with everything, the stock market will recover. Now's not the time to sell. And this is one of the reasons why when you get a little older, when you're 60 plus, you really need to think about repositioning your long-term portfolio, because if you're heavily deep in the market, when these meltdowns happen, sometimes it can take a year, 2 years, 3 years to recover. And if you need this money and you need this dividend income and you need all that to survive, well, this can definitely put a hurting on you. So 20 to 30, invest at least 15% of your income in your 401k. I don't care what they match. That's just a bonus. Everybody seems to think that the company puts in 3%, I'll put in 3%. No, that's not the answer. The answer is put in 15% of your income, and then whatever they put in, that's a bonus. If it's 3%, well then 15 plus your 3, that's 18%. And you do that annually from the time you're in your 20 all the way up to when you retire and you'll be a millionaire. From 20 to 30, invest heavily. From 30 to 40, you do the same. 40 to 50, you do the same. 50 to 60, absolutely. When you hit 60, you really need to start really positioning yourself to protect yourself for the downside, because it could take several years to recover. I hope this was helpful. So the moral to the story is, don't panic. If you have cash, buy more. Dollar cost average in over time. This is where the big money is made in the markets on these major meltdowns. That's why it's a good idea to have a good cash position. Have heavy cash, well, you can start buying into this thing for the next several months. And then when it gets back up to the top, well, trim your position, get back to your 80% invested, 20% cash, or whatever your balance is. Hope this was helpful. Thank you for tuning in. Always remember the markets are very risky, and to always dot your I's and cross your T's. And don't forget the Z. God bless and happy investing. Oh yeah, please join us on TikTok. Also like, subscribe, hit the bell. Appreciate it. If you found this analysis helpful, please consider subscribing. Helps the channel. Thank you.